What's up, guys? It's January 24th, 2025. We had a bit of a pullback in the markets. On a daily chart, it looks like a pullback. Bad follow through at highs. 5 minute chart, we had a few legs lower. We had a range bound, a few legs lower, sideways price action. That's normally the type of price action we get. We get some sort of trading range, then we'll get get one or two legs in one direction, and then another type of trading range. So here we got a small trading range. We got 1 to 2 legs in a direction. And we went sideways. Here, 1 to 2 legs sideways. This sell off ends up being still a trading range. Trading range, 1 to 2 legs. Trading range, 1 to 2 legs sideways. A lot of sideways price action. Sharp leg down, sharp leg up, sharp leg down. So you see, it kind of happens the same. Doesn't happen the same way, but the same type of sideways breakout, whatever have you, sell off. That's it's just the rhythm. It's the rhythm. That's the word I'm looking for. Daily chart, 15-minute chart. We have 3-4 legs higher on the daily time frame. Leg 1, pull back. Leg 2, pull back. Leg 3, pull back. Leg 4, bad follow through at swing highs. The previous swing high. That was a loose count. You could also count it like 1, pull back. Leg 2, pull back. Leg 3. This right here shows there is a pullback. So pull back leg 4, pull back leg 5. Lots of overlap. Any leg past leg 2, I consider a trade range price action. Leg 1, pull back leg 2. We're at the swing here. Deep pullback, that puts us in leg 3, 4, and 5. Trading at the swing highs, very close to all-time highs, right around here. I'm sure bulls want to see a measured move of the breakout with good follow through, but maybe we put it at top of the pullback, top of the breakout point. Or we are at swing highs and bears want to get a lower high, would be the other side of the book or what? I don't know, the other side of the picture. And yeah, we start to sell off for a few legs. Bears are going to start targeting previous swing lows. So here's a swing low, here's a swing low, here's a swing low, here's a swing low. They're going to want to go like this. Give me 2 seconds here. So yeah, they're going to want to go 1, 2, 3 down. 15-minute chart. See that bull channel from yesterday had a bullish breakout. The bull channel, a few legs higher, like 1, pull back, like 2, pull back, like 3. This bar looked pretty climactic. It went sideways for quite some time. Bears got a few legs lower, like 1, pull back, like 2, pull back, like 3, pull back, like 4. Testing here, testing the breakout point. This doji. Let me zoom in a little bit. After the test of that doji, bulls got a lower high. Bears, there's also a wedge bottom here. Leg 1, pull back, leg 2, pull back, leg 3, wedge bottom, and it rallies. Leg 1, pull back, leg 2, pull back, leg 3, pull back, leg 4. Climactic price action, back follow through. Bears get there, leg 1, pull back, leg 2. There's a neckline here. The neckline is broken, and bears want a measured move for sure. So the measured move was not met. Very close, but if you go body to body, it for sure was met. You could even say that's the neckline and that's the high. I think that's actually more fair because that's the bull leg. What size is the bull leg end there? But that's the main breakout for the bulls. Bears get their measured move. Only look the short. Look at the 15-minute. It looks brutal. If we're counting legs on the 15-minute chart, we have a leg 1, trend line break, leg 2, inside bars, breakout mode. It's a triangle. We have another trend line break, breaking out of the low here. So this is renewed momentum. We can reset the leg count. Leg 1, pull back, leg 2, pull back, leg 3. Any leg past leg 3 is trading range price action, and we get a bull bar testing the breakout point. So we are definitely in trading range price action. Leg 1, pull back, leg 2 for the bulls. Deep pullback because we can expect deep pullbacks in trading ranges. Leg 1, pull back, leg 2, deep pullback, leg 3. Leg 3 is climactic, creating a wedge top, somewhat of a bear flag. This wedge top is testing the breakout point. I had an order sitting right here on the 5-minute chart for a couple out during this pullback. Excuse me. It never hit until after market hours, but the target would have been met. I had my sell order sitting below 51. It ticked below 51, so right around there. and maybe I would have got filled. I do market if touch order, so I think I would have got filled. I would have went for 1-to-1, and that was met. It just happened to be at the end of the day, so I didn't catch that. I did catch a little bit of the tight trading range price action. Took about 7 or 8 trades today. Had 2 losses. Scalped out of 1 trade that became a scratch, and then took a swing. All in the order entry. Actually, no, there's a couple market order entries. Excuse me. Anyways, 76, 78, 76, 77, 78. I don't know how to count today. Shot to get its own second leg. That's yesterday's price action with big gaps at the end of a bull trend. So if we look at the 3-4 day bull trend we've had, these are the biggest gaps. So yeah, we have a gap up here. Okay, sideways, kind of some gaps here, kind of some gaps there. But then today or yesterday had some really nice gaps at the end of a bull trend. Nonetheless, we have a small gap up, strong enough for this leg to get a second leg. Leg 1, pull back leg 2, pull back leg 3. That's a loose count. If you don't want to count to yesterday's price action, leg 1, pull back leg 2, pull back leg 3. Wedge top wedge top bar 4. So I'm going a little too fast here. Bar 1, we have a bull bar with a doji, two-sided trading within this bar. Bar 2 is a bull bar closing on its high, but it's not breaking out of much. Bar 3 shows that bar 2 is getting follow through, but again, trading range price action. It has more tail than body. Small, big, small, big. Contraction, or you can even count it from here. Expansion, contraction, expansion, contraction, expansion. Bad close on bar 4. If bulls want to rally, they definitely have to close on their highs. Bar 5, inside bar, creating a flag at the high of a trading range. Why is it a trading range? Because we have two-sided trading. You just can't see it yet. Bar 6 sells off, breaking the low. I was actually looking for a second leg to test back hip here. I bought the high of bar 2, and I was looking for a test back up here, but I scalped out before bar 7 even formed because bar 7 was a news bar, and they're getting bad follow through at highs. Trading range price action says to buy low, not high. Bar 7, shot to get its own second leg. Bar 8, bad follow through for the bears. Bar 9, bear bar closing on its just below its midpoint, but there's more. There's tail. It's equal tail, equal body. Bar 10, same thing, but now it's painted a bull bar. Then we have a lot of sell off. We have a lot of back and forth trading here because now we have a big up, big down. That puts us into a tight trading range. Leg 1, pull back leg 2, pull back leg 3, pull back leg 4, pull back leg 5. You don't have to count that much, but what you need to know is we're in a trading range, and this could be a wedge bottom. I got filled on the high of 15 right here on bar 17. I had some time to scalp out 18 and ended up hitting my stop. I had a tight stop. I got pinged out and went to my target. Sometimes the market is just like that. Yeah, so no harm, no foul. 21, bad follow through for the bulls, but this is a big bull bar, so they might want to be taking profits. We're vacuuming up to the trading highs. At this point in time, we don't know if it's a bear flag that's going to break out or a bull flag or a bull breakout that's going to get continuation. Bar 22, 23, 24, 25, 26, 27, 28, all bull bars, but we have the same type of pattern here. So leg 1, pull back, leg 2, leg 1, pull back, leg 2, pull back, leg 3, pull back, leg 4. Now we're testing the high of bar 7. This was my third trade of the day. I had a limit order set around here. I got filled on 26, 27, can't really remember. And I sat through some heat. It almost hit my target, my stop. I had it 1 tick above 6. Sold off. I scalped out on 30 in case that was a lower high. I bought the lows here, and I actually got stopped out of this trade. I was looking for a retest of this high here with bars 34, 35. Ended up being a lower high for the bears, and I got stopped out on pretty much the low. It was as 39 was forming, nonetheless. Entered around here, stopped out there, small loss. I'm about break even, minus 2 points on the day right now. Talk about the price action real quick. So here we have that breakout, we have that pullback, we have a contraction, more tail. Then we have bull bodies closing on their highs with gaps. So you might think, why didn't this get a continuation? Well, it's a trading range. We're in a trading range. This is trading range price action. These bull bars in a row, it's the third leg up, and it could be a vacuum test. Leg 1, pull back, leg 2, trend line break 26. Leg 1, pull back, leg 2, pull back, leg 3. Multiple ways to count it. Leg 1, pull back, leg 2, pull back, leg 3, pull back, leg 4 on the high of 29. So the high here is what I just called leg 4. The high here is testing the sellers right here on the high of bar 7. So if we broke bar 7 up, that's not a good. I'm looking like this. This is only 50. This is 50, but you want to be selling in the upper third, and I barely met that objective here, which is why I think I got saved by the little tick. My stop should have been there, but I was not. I'm trading a little differently these days, and I'm letting the market take me out, so my stops are tighter. I just think from what I've going over my old trades, it just makes more sense for the market to take me out. And if I'm trading breakouts, it really should never hit the breakout point. So if it hits the breakout point, I'm not in a breakout. I'm in a trading range. You guys see the context is wrong anyways. So that's why you're going to hear me say my stop's getting hit now, because I'm not having, I used to have 1 to 2 R stops that I'd manually hit out. I could have hit out on 36, but I really thought this was some sort of delayed bull flag. And what happened down here is what I thought was going to happen all day. I thought we were going to have a tight trading range like that. Nonetheless, I got stopped out. 36, trying to get its own second leg. 35, small pullback. We're still bullish. We're not necessarily bullish. We're below the EMA, but above the higher time frame EMA. 37, or excuse me, 38, 39, 40, 41. Bear pressure stacking up. 42, we break out below the low of today. Renewed momentum. So now we can count leg 1, pull back, leg 2, pull back, leg 3 into trading range. So this sold off and reversed. So that's leg 3. When we break out below, that's renewed momentum. Leg 1, pull back, leg 2, pull back, leg 3. Different ways to count it. Nonetheless, you have to acknowledge it's just two-sided trading. It's a channel phase with bar. I mean, it's a channel phase all the time. We've been channeling. The market's always channeling, but let's say this is a fresh breakout. 43 puts us in a channel phase. You could say leg 1, pull back, leg 2, pull back. Actually, I want to, hold on. Okay, this is the first leg because 46 breaks the trend line. It's the first trend line break. You guys see? Within this leg, there's 2 legs lower. Leg 1, pull back. Leg 2, pull back, leg 3. So there's 3 legs lower, but this is the first trend line break, 46. The next overall big leg we have is 48 because it breaks the trend line. And I wanted to get 1 R of this, but I was skeptical of these 2 bull bars. I saw 48 and I saw 49 rally, and as it was selling off, I've market ordered the sell right here, and I caught it to the low. That was pretty much the trade of the day that put me in some nice profits. Made about 10, 11 points today. I went for a 1-to-1. So I got out like right before the low tick. It still sold off a little bit. Nonetheless, let's go back to counting legs. Leg 1, pull back, leg 2. Then we see 50 being a trend line break. Then we have another steep trend line here. That's a bad drawing. We can draw something like this. What I'm trying to show you guys is that 55 breaks another trend line, puts us in leg 4. And any leg past leg 3 is trading range price action. And that's what we got. We went sideways for the rest of the day. I took a scalp. I bought the low of 66. So actually, I'll talk about it when we get there. Leg 4, bar 54 shot to get its own 3 legs down, and it does. Leg 1, pull back, leg 2, pull back, leg 3. Leg 3, nested wedge, along a wedge, along a wedge, along a wedge. So there's a nested wedge down here, and that rallies for 2, 3 legs. Leg 1, pull back, leg 2, pull back, leg 3. Third leg's not strong enough, bar 67 to get to a new high. We go sideways, tight trading range, sells off. This leg is the first trend line break. And then you can buy here once the double bottom's met. 75, good reversal bars, just not enough time in the day to trade. I think 75 is a good buy because it's after a trend line break. We were still in a bull, we're barely in a bull regime. And that leads to a few legs higher, like 1, pull back, like 2, pull back, like 3. 79 is testing the order I wanted to get filled on because I wanted to short the trading range highs, and this was the last bull bar, so I assumed this was the trading range highs. I would have got filled and met 1 R pretty quick. 2 seconds here. Okay, so I'm gonna talk about some trades and some leg, and then we'll do some leg counting. So yeah, I took those trades, got stopped out, took that trade. I made more than double back here, and then I bought 63s low. I'm usually one to buy 63s. See, so if I bought 63s on the retest on 66, I would have got stopped out here. But the first touch is usually a good sell, so I was kind of gauging the strength of 67 and how it was bouncing. And once it ran 60, excuse me, I've been saying 63, I'm going to say 62 stop, I bought it. So there's buy orders down here. Or excuse me, mark bulls buy. They sell at the position. They're going to buy to cover. So anyways, what I'm trying to say is I bought this low, scalped out for 2R. Usually this would be a 1R trade, but I also would have got stopped out because that would be one tick below there. Saved myself a loss there. And then I called it a day because I thought that was pretty risky behavior. And it was also pretty late in the day. This is the trade I was waiting for a while. I was waiting to sell 51, but I already got filled. I actually would have made it on to the tick on the 5 minute so I would have got filled here. Bang, knocks me out quick and I would have made it before market close. It's all right though. I had a good trading day. Took some risky trades. I'll go back and review them later. I wanted to talk about, okay, so let's do the fractal price action. I wanted to talk about this trading leg because it's the first leg down, but it's also 3 legs lower. We'll add the trend line break there. So there's the 3 legs. Okay, see ya. I'm just joking. Leg 1, pull back. Leg 2, wedge top, bear flag, breakout. Leg 3, vacuum. Leg 4. Leg 1, pull back. Leg 2, pull back. Leg 3. Leg 1, pull back. Leg 2, bear flag again. Breakout. The second leg trap in the training range. We rally for 3 legs. Leg 1, pull back. Leg 2, pull back. Leg 3. Again, a wedge top, in a bear. We're bearish. We're below the EMA for 120 bars. Sells off. Leg 1, pull back. Leg 2, pull back. My mouse. Leg 1, pull back. Leg 2, pull back. Leg 3, and we go sideways. That's that nested wedge bottom I was talking about. Should have done that. Oops. Okay, and we've seen that nested wedge bottom. Go over some 3-bar micro channels. Looking for 1-to-1 here, you would get stopped out. You could buy lower, you could buy more. I don't suggest it. If you had bought the close here, you would not meet 1-to-1. Actually, you would get stopped out. You buy here. So yeah, so this is a strategy. This would be a loss no matter how you frame it. You go for 1-to-1, stop above. It would you just short here, stop above. It would be met, but you're also playing for a breakout. And at this point in time, looks like a trading range, so I think it's risky behavior taking that short. We're very close to the EMA, which would be theoretically acting as support, and it did act as support for about an hour 10 minutes, even all the way up to here. So you'd be sitting about bouncing green red P&L for about 2-3 hours. So I don't think that's the best short. You could definitely scalp out. There's enough momentum to scalp out there, and you can go for a measured move of 20. That's meant to the tick. And then bears get their lower high. Now you want to get a measured move of 30. You see the deep pullback, short 36, because this is also a wedge top here. Leg 1, pullback. Leg 1, pullback. Leg 2, pullback. Leg 3, wedge top, sells off. And that starts the fair trend we have for a couple hours. Waterfall. This was my measured move I was able to hit today when I shorted. I shorted this low on bar 49. It was met there. I think that was a good trade. You could take any of these for a scalp, but once you start to get back for trading, that ends the leg, the spike. The spike, you want to be measuring strong bars, so you could even say it starts there, and that's met as well. There's a measured move. Again, there's that wedge top we talked about. Another wedge top, bear flag into the EMA. Sells off. I think 49 is good for a measured move. It's trapping bulls that bought more and bought lower. They get trapped. You had some time to get out. I watched this rally. It was stalling and then reversal. You short the pullback at 48. At 49, its own leg. 50 is a pullback. You can short the high here. You can short the low here. Add to your position. Sells off and you get waterfall profits. There's a good second leg here. I hesitated on it because there was more than 20 bars below. But these bulls here, they made 1-to-1 very fast. Just shy of 1-to-1 actually. Bar 59, bulls make 1-to-1, almost make 1-to-1. They're short by a tick. And that's because in trading ranges, they're front running their target. So as it's moving up, they're selling out positions. 61, 25% pullback. You could buy the close if you're keen on that. That's a hard trade, but it's a good trade. Why is it a good trade? Because we're in a bull regime and we're on support. and you see the bulls have made money, pull back leg 2, second leg trap into the EMA 66 is that first sell. I bought that, caught that for 5 points, then caught it. Leg 1, pull back leg 2, pull back leg 3, pull back leg 4. Wedge bottom into support. It's also a trend line break. There's your double bottom, and it rallies. Coming up just on 20 minutes. Guys, if you learned something, hit the follow button. Learn something, share the show. Don't be a hoe. I greatly appreciate it. Join the Discord. Let's talk this weekend. I have a good time talking to you guys. If you made it this far, let me know in the comments if you made it this far. Type TGIF. All right. Well, you guys have a good one. It's Friday. I'm going to study. I hope you guys do some studying. I'll talk to you guys on Monday. Be safe. No drinking and driving. If you can drink responsibly. If you're under the age of 21, don't drink. And yes, unless you're in a country that allows that, then do you, boo-boo. I'll talk to you later. Have a good one, everyone. Thank you for your time. Bye.